Good morning, everyone. This is Daily Trading Analysis with the weekly recap. Today, Saturday, the week of the 20th of February, in which we are more or less ending the month. Next week is going to be the last week of the month. And in terms of fundamental, this week we have not had a lot of news. No news on Monday due to holidays. Tuesday, no news. Wednesday, we got the NBA mortgage that I would like to highlight that from 6.87, we are now crossing 7%, and that's why we have applications going down minus 10% in February. So households really feeling the pain in this 30-year mortgage because the index, interest rate is going higher. And I mean, this is unsustainable. So more pain for longer. Also on Wednesday, FOMC minutes, I'm not going to cover in detail, but basically they are not prepared to talk about interest rate cuts. So that's against the market and what basically they are trying to address in these expectations for the rate cuts. Remember that we were aggressively pricing in a lot of interest rate cuts to the downside into December 2024. Right now we are up here, and in March there's no way 96%, and also in May from here at 50% we are now no cut at 74%. Market expectations are being adjusted pretty heavily, and that's why we are seeing the markets, the Nasdaq, most sensitive to interest rates, pulling back more than normal. And we are seeing a little bit of weakness. We are going to see that in the charts. But right now we are pricing in the first interest rate cuts in June, one interest rate cut, then September, another one, then November, another one. Only 75 basis points of interest rate cuts. That's a change from the 150 and more than 6 that remember last year were pricing in. So economy is holding. That's good for the soft landing. But I think the expectations from the market have been adjusted. Now a reality check on the investors, from the traders, from the equities. We are going to see that in the charts, but remember that because that is going to see, we are going to see more weakness than not on the equities. Thursday, initial jobless claims going lower. Continuing jobless claims also going lower. So economy is quite strong. S&P Global PMI Flash estimate 3 readings in 55, more than 50 means expansion, but we are coming from 52 on services and 52 on composites. So I think this is a check in the right direction for inflation. And a lot of Feds talking also on Thursday. And look at this, the 30-year mortgage rate 6.90 and the 15 6.29. So lying with the official rate also in February. And Friday, no news Friday. No news Friday, and that means usually continuation or manipulation. And I think it was the last one, manipulation. This is the Nasdaq NQ continuous chart. Remember to back up just that if you are in TradingView. We are not going to look anymore to the left. We are way past our previous all-time highs right here. And we were chopping since then. So right now, this was the last time we were at all-time highs. And look at this candle. This candle at the same time that we got this candle at the previous all-time highs. I mean, this is way different. We are going to see that this popping tail, it's quite dangerous. We are now opening a daily fair value gap due to Thursday NVIDIA earnings. But look at the week. The week on the weekly chart was a little bit of buying the dip and then retracement. And this is an inner candle. We are closing below the red one, below the open of the previous red candle. So this distance, it's quite telling if we go to the daily and we analyze how the weekly evolves. This was Monday, Tuesday, and Wednesday. 3 days in a row pulling back. And if it was not for Nvidia, we were not even touching all-time highs. So this candle is not as bullish as you may think, even though we are having a gap, a fair value gap, an imbalance in this push. This is going to be pretty important. If we are not reclaiming all-time highs, we are entering and going through this daily fair value gap, and we go through, this is for the ICT traders, this is one of the key components to start leaning to and looking for shorts. This is not the confirmation, but this is the first sign of weakness. Because look at this week. This week it's been just 3 days, Nvidia earnings, and another retracement. So there's certainly a lot of people short in this market. This is obviously because a lot of people may think that this is overextended. And at some point, if we go to lower time frames, let me just go through the 1 hour. This was the week. So we got the all-time highs here, another pullback, pretty nice for entering more shorts here. People were shorting, and then Nvidia came out with it. It was only Nvidia. I mentioned that in my video that Nvidia was the only one pushing 16%, the AI hype. But I don't think that's enough, because the fundamentals, the rest of the economy is just pointing towards the downside. Nvidia, it's now huge in market cap. It has one of the topics that is pretty important right now, that is AI. A lot of people are investing in Nvidia, but that doesn't mean that Nasdaq cannot pull back. And that's what it did. Look at this nasty 1 hour candle, pretty bought up, but then closing at the lows. Closing at the lows. Let's see the 4 hour, because the 4 hour is quite telling. So this is also a 4 hour fair value gap that got run through a little bit. And just let's do just a quick analysis of what happened into Friday, because we were super short into the Thursday, and then Nvidia came out with huge earnings. We pushed the upside, and then look at this move. Any short of pullback was missing, no consolidation, just buy, and starting here, up here, or even up here. If this was a 1 minute chart, do you think that it is reasonable to just take any longs up here without any kind of pullback down here? So it's super difficult for a market like this that is going long, buy, to jump in. And that's why I think buyers are not much present in here. There's more sellers than buyers, because buyers are waiting for another pullback. And that's the tricky part. If now that sellers are more or less taking control, we are waiting for buyers for pullbacks, that can be tricky. We can buy a falling knife and then fall into a trap when sellers pile and pile in, and there's no more pullbacks being bought up anymore. Be really careful with that. This is going to be a key technical week next week, in which you would need to analyze pretty much every detail. If you just follow the imbalances, there's a lot of imbalances that were present in the Nvidia push up, and the only thing that I could catch was a reequilibrium, because this was the 30-minute fair value gap, the only one that I could find in which minimizing my risk. This was the only one. It was not on discount. I was just looking for manipulations down there, maybe. So I was watching this pivot. This liquidity got taken, tapped into the fair value gap, and then I was just looking for a 1 minute entry, looking for an ideal setup. And This was the liquidity that was taken. Look at this candle, manipulation to the downside, and we've seen this in the past in which they grind and then push. So that's what I did. I was watching for a pullback down here that was not ideal, so I didn't enter here, not even with a limit order in this fair value gap that was being open. So we got the inverse and also the bullish fair value gap with a tap in this gray area. That is the 30-minute fair value gap, and a manipulation move that I look at this. I already have here a projection of what we can do up here. So I could just target the highest pivot, even pre-market highs, but I was not too confident. I just wanted to have a nice Friday into the overnight, thinking that I've been quite aggressive in this long that may need more time. I just wanted to re-enter the fair value gap and then taking this candle with a stop down here and targeting this one of these pivots. I was watching through the trade, trying to find some kind of signal that made me just take those gains. This was a 1 to 4.4 risk reward ratio. 38 points is not that huge, but it's more than enough for a Friday in which we are tentatively going again to all-time highs. That's what we did. So it was not a bad trade. It was not a good setup neither. So it was just quick scalp into a rebalance, and that's when I took it off. Once I saw this pullback, I put my stop here, and luckily I was not hit. And then into the open, just pushing through all-time highs. Look at this push. This is not even the open. The open was here. We open at all-time highs. The first candle, the first 1 minute candle, what is this? This is shorts piling in for a move lower. Fair value gap, short. This is quite cheap short. Let me just, even if you enter here, targeting all this liquidity, target this, or even this, depends. First will be this. This is a 1.4, almost 5, with 15 points in risk. Pretty cheap short at all-time highs. I would take this every day. But not on Friday. That was key. And that's what happens. Look at this. It's just people buying the dip, okay, but then closing lower. So with this sentiment, let's see how the individual tech stocks look at Apple. 1 minute chart on Friday. Daily chart also, we are seeing a minus 1% on Apple. Microsoft also in the negative, filling the gap, and look at this candle. This candle is not beautiful. This is just nasty candle. Tesla minus 2%, upgrading by air on the software on the cars with issues with cars, Elon Musk doing its thing. I mean, Tesla is just weak. Amazon, the only one with Nvidia finishing barely in the green, tapping 175. And I think November is going to continue higher if consumer spending keeps showing strong numbers, but also quite weak. Google, flat. 0.02 with gaps in the middle of the range. Nvidia, huge pullback after earnings. When everybody's on board for a huge push, then it's when the knife, the manipulation, the big money is jumping in against you. Meta minus 0.43. I think Meta it looks stronger than the rest. So I wouldn't short Meta. So as you can see, weakness across the board on NQ. It's quite weak. But ES, the S&Ps is holding. This is the daily. Look at the weekly. The weekly is just the 1, 2, 3 bullish setup with wicks. So if you are looking for longs, maybe the S&Ps are your best bet. But more than that, I think small caps are hot right now. Opening, the ES is opening a daily. It's way more bullish. This candle is a little bit worrying, but we can just let's track the middle point of this daily to see if we really tap into that. The 1 hour looks pretty brutal. It is holding better than the Nasdaq, which is now holding all these max 7 that I really think it's too overvalued, and investors are pulling back a bit and sellers are taking control because of the overvalue. But S&P is quite healthy. We have also the RSP, the equal weighted S&P ETF, that is also quite healthy. We have 2 points of liquidity for all-time highs up here. So the market is broadening. The breadth is quite good, but this is an insane angle for that. Talking about the small caps are quite good holding, quite volatile, finishing barely at 200. But there's a lot of structure that here that we are now trying to hold into a breakout. So I can certainly see small caps reaching 200 to 230, something like that, this zone up here. So if I was to invest into something, I would not touch the Magnificent 7 or NQ. I would just invest in some undervalued small caps or Russell stocks. That's what I would do. Dollar, quite interesting to see if we are doing higher lows along the way and higher highs along the way. So this is pretty obvious that dollar is stronger than the rest of the markets, but that doesn't mean that it's easy to trade. We got a push, and on Friday we just consolidating. We have, excuse me, an inverse fair value gap up here, and we bounce from a recent 1 hour fair value gap. So we are just in the middle of the range, but look for the dollar to continue showing strength and pushing this inverse, because if that happens, more weakness to come into the stock and equities markets. Treasuries were in the green on Friday because I think the interest rate cut it's more appropriate than before. I think this is a good baseline for analysts to see, okay, treasuries may be going higher or at least retaking this high. The treasuries are quite good right now. And apart from that, crude oil is also showing some weakness. So if crude oil starts showing strength, again, inflation showing up, and dollar continues showing strength, yields pull back a bit, but look at this. While we are doing all-time highs in the equities, yields, the 2-year yield and the 10-year yield are pushing a bit. And this is a divergence, which I don't like. That coupled with the fact that dollar is also quite strong, buying the dip. Look at this 1-day candle being bought up. So be really careful. Be really careful. If you want to trade longs, I think it's better to look for the S&Ps, piggybacking the Russell 2000 and the small cap strength. That's my recommendation. So for a forecast, the NQ, it's key for me. The NQ is super key. Yeah. So basically my forecast, it's the same as I explained before. I want this liquidity down here now to be taken, and we need to go step by step. Step by step means that small targets until confirmation. And for that, we need to attack this daily. The 4 hours, it's quite strong. So the first thing that I would do is As always, Fibonacci from the highs. Down here, there's a 4-hour fair value gap that needs to hold also. So this 4-hour needs to hold, and we need to see this kind of move. So slowly going down and then see what happens here. If we continue going through the 4-hour and the daily, let's see if the golden pocket holds. And there's also this 4-hour, but I wouldn't touch this 4-hour for longs and unless it's for a rebalance and continues lower. So this is quite weak for me. I wouldn't touch this. This 30 minute is now gone. And this manipulation move is it's pretty interesting, at least to see if we can. I mean, this is unbelievable. Yeah, I think we can just project that. Let me just do that. So projection to the downside, we can now remove this. The projection is just for this manipulation move. That was the 1-hour or even the 1 hour, the 4-hour. The 1-hour, you can see it better. This manipulation move into all-time highs to catch a lot of people buying the all-time highs and then sharply pulling back. The manipulation move for 2.5 or 2 retracement is just below that. So quite interesting, right? So that would be my plan. I'm not going to buy anything up here unless like this. But I would like to see if we slowly grind higher, catch more people off guard, and then start entering the fair value gap on the daily towards the 4-hour and see the pullback. But for sure, I think there's a lot of people playing this manipulation move to the upside and basically trying to catch the big short from the all-time highs to who knows. But for now, the short-term target it's down here. Out here is a pretty reasonable target for people that were playing the short to hold through this inverse, repair all this Nvidia weak structure, and then find some targets down here. That's what I would do. There's also, this is on discount, also the 1-hour. So there's a confluence down here of support that I need to see if we can hold up or not. So that's it. We have our pullback, we have our projection coupled with a couple of fair value gaps. Let's see if we can have some short from overnight into the Monday and see what happens. But I would not play, I'm not bullish anymore the NQ. So be really careful with these kind of things. Try to analyze and be smart. Don't follow the herd saying Nvidia is going to 1000 because that means nothing for the NQ that has 100 stocks there. And on the fundamental side, we have also our weaknesses. So be smart. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single week. On Saturdays, the weekly recap I uploaded, and it's to review the week on the fundamental side, on the technical side, to review other markets that may have some interesting ideas for us and to have an edge for next week. Be prepared, be smart, analyze, study the markets, experience, and don't forget that patience and discipline are your key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.